Hello, my name is Chris Douthit. I'm an analyst at Option Strategies Insider, and today I'd like to talk about market tops, which is likely what we are experiencing right now. Now, market tops and market bottoms are very different. Market bottoms are often characterized by a swift and clear events that happen rapidly, featuring substantial reversals from low points followed by a noteworthy and rapid rally. Market bottoms tend to be a little bit more straightforward. When we talk about market tops, the pattern we observe is often a sequence of declines and rallies. These fluctuations often don't leave a substantial impact in either direction before the bottom finally falls out of the stock. So before you declare if you're actually in a market top or not, what you need to do is look at several different factors to figure out if the confluence indicators reveal a market top. So the first stock we have up here is IWM. And IWM is a small cap ETF. And we can see this thing can move rather rapidly. We can see the huge decline right here. This fell from 200 down to about 160. That's a pretty rapid descent over just a short time span. And then just as quickly, it rose back up. So we can see this thing can really move when it starts moving. And we can see after this current descent, it got stopped in its tracks right about at the 205 level. It kind of came back down here, and it's kind of been in this range ever since. And we have a few hits on the boundary markers, but we don't want to get faked out by this last boundary penetration. Oftentimes, a stock has a throwover, and a throwover is when a stock penetrates the boundary, but then fakes a lot of people out, but then rapidly falls back down. And it can fall all the way back down to the bottom boundary marker and bust right through it. And generally, this is the last hit, so it generally will bust right through this and drop significantly more. So right now it looks like at very minimum it's fallen back within the boundary, and we're going to get a move back to the lower marker and probably much lower. Now before we conclude that, let's take a look at SPY. Now SPY is the S&P 500 ETF, and a lot of things, I've marked this up quite a bit. We can see here that the stock has moved up rapidly over the last 3 months, and at the same time we can see the RSI has fallen. So this is what is negative RSI divergence. This basically means that even though the price action has increased, the demand for the stock has not increased. And this is a pretty strong sign that the market has been moving up on not necessarily more buyers, but a lack of sellers. So we can see here the market's up, RSI is down. And if I pull up other indicators, we can look at some other ones too. We have the CMF. We can see the same thing. The CMF has some divergence here. And if I want to pull up, another popular one is MACD. So we can see MACD, this has also fallen over the same time span. So all three of these are diverging rather quickly. And even though that the price action is continuing to go up, that tells me that the stock is running out of steam and this is likely to trade off. Now, there's so much stuff on the chart. Let me get rid of a couple of these. So next thing I want to look at is the Gann square of 19. Now, if you're not familiar with the Gann square of 19, I have another video explaining what that is. I'm not going to go over that in this video. But basically, the market often has huge turning points on these vertical lines. And we can see here, there was, a one right here, market changed, market changed, market changed, market changed, market changed. So it's been on a pretty good rally over the last few months. But we have another Gann square coming up, and this is the Gann square of 12. And it could be next week that this is where the bottom finally falls out. Now, we did see a market top just a few days ago. We can see on February 12th, that is the market top. It's kind of been trading in this range. And that is consistent with a market top. Remember, market tops don't have immediate falls. It kind of moves back and forth for a bit until the bottom falls out. So this date of February, I believe this is the 22nd. So February 22nd could be, which is only 3 trading sessions away, the date that this one falls and we see this big drop coming. The other thing we want to do is want to keep an eye on volume. Stocks rally on enthusiasm and high volume generally. So if you see a stock rallying when volume isn't higher, that means that it's because of a lack of sellers. So if you see a stock is rallying on light volume, that means that there's not a buyer enthusiasm going on, but instead there are lack of sellers. And sellers can only stay unmotivated for so long. Once these sellers start to get motivated and come back into the market, that's when you're going to see the stock fall and this momentum on the downside picking up. So we've looked at a couple of ETFs. Now let's look at some of the bigger stocks in the market. So if I head over to Microsoft, and this is one I've been following for quite a bit, we can see that it is on its final wave higher. Let me pull this down a little bit. We can see the larger wave is on a wave 5, which is the end of the impulse wave. And the smaller wave, which you can see with the red numbers, is also on a wave 5. And generally when you have the larger wave and the smaller wave concluding at the same spot, that means that a big drop is also coming. So this also aligns with what we saw on the previous charts. And you can see here, we did spot some divergence. You can see these red lines. It shows that RSI is down, yet the price of the stock went up over the same time span. And we kind of detailed that this blue line would go up. We drew this in a few days ago. You can see that this blue line would go up, hit the top of the chart, and then fall. And that's kind of exactly what has happened, although the fall has been a little bit more aggressive than what we anticipated. But the price pattern is at least in line with what we were thinking, and that's what's most important. You don't want to jump into and trade any situation just because you see something right away. It's best to draw in or at least make notes on what you think the stock is going to do. And then if it does do that, you know you're on the right path and you know it's a tradable situation. All right, let's head over to Apple. So this is one we looked at a few weeks ago. We kind of drew in here that it was likely, let me pull this down a little bit, that it was likely at the top, and we kind of have our corrective wave in here. Corrective waves are 3-part moves. We have an A, a B, and a C. And the C wave is going to be an impulse wave. It's going to be 5 different waves, and we kind of drone those in here. And that's exactly what we've got. We've got the top of B right here. Then we're going to have a 1, 2, 3, 4, 5. And look, that's almost precisely what has happened. Now, we probably are going to get another move higher, and then that could be at the beginning of next week, and then it's going to rise up. And then once we see that, that would be the opportunity to trade. And you can see when this thing trades down, we'll be ready for it and we'll have a trade on. So you can see here that all these factors are all representing the same thing. This market is overbought, a top is likely in, and we're likely going to see a sell-off soon. So this doesn't mean we want to go out and short everything. That's not what we're trying to do here. But if you're thinking of buying, this is probably not the time to do so, and it would be the time to add protection to your portfolio. All right, everyone, I hope this helped. And if you want to stay one step of the market, be sure to head over to optionstrategiesinsider.com, get our free option trading course, and see how we analyze the markets.